What's going on, everyone? My name is Nicholas Merton here at Data Dash, and today is June 1st of 2020. Well, folks, I hope you are having a fantastic day wherever you are and a great start to the month. I want to go ahead and kick things off right as we've got a lot of topics to talk about. We'll not only be discussing the strength that we've seen in Bitcoin's price, as well as Ethereum is now well above $200, but we'll also be diving into a lot of really interesting topics in the DeFi space as things have started to ramp up for governance tokens, and also we have some big launches for some very interesting projects. Outside of that as well, though, in regards to traditional markets, I got to spend some time to talk about the sheer difference in reality from what's going on in equity markets versus the real world. It's quite shocking if you really consider what's going on. So we've got a lot of things to discuss throughout the video right after our quick sponsor. Our sponsor for today's episode is Ledn.io. For those of you holding Bitcoin and digital assets long-term like myself, why not put it to work? Ledn works with Genesis, the most established institution in digital assets, to give its retail clients access to a suite of institutional-grade services to manage their digital wealth. Their savings accounts let you earn the best risk-adjusted rates on your digital assets at 7.5% on your USDC and 4.1% on your Bitcoin. Their B2X loan service lets you double the amount of Bitcoin you own through a Bitcoin-backed loan. And you can also access cash in a tax-efficient manner through their Bitcoin-backed loans while keeping your Bitcoin under insured custody with BitGo and real-time proof of reserves. Get a 250,000 Satoshi bonus if you register with the link below and get a loan today. Alrighty, everyone, so let's go ahead and take a look across the board for cryptocurrency markets to start. As we can see over the last 24 hours, the vast majority of cryptocurrencies are in a no-trend scenario between 1% and 2% to the upside or downside, so nothing too dramatic in the sense of change. Coming back down a little bit, as you can see, most of the players are probably a little bit more in the red. Coming back down on some of the gains we saw over the last 48 hours. We really had some good gains yesterday in the market. However, Chainlink and Engine Coin, two of our top 10 plays, doing quite nice up here, nearing close up to double-digit territory as Illic is performing right now. So, want to go ahead, analyze the market here real quick. Taking a look at price right now, we're holding quite nicely. We're holding up against this general resistance range here. Again, setting what might look and appear as a third lower high in this case, but I'm not really too confident in this case. I'm not going to go ahead and say that this is a significant lower high. You know, if we were down here, for example, at 9,000, testing some of these bigger even levels, I would get that. More than anything, the significant TA here is that we broke out above the descending wedge here that was going down towards the significant support that we had back over here and over here. The thing that really is getting me a little bit worried here in the sense of Bitcoin's price, just to be completely fair and non-biased, is the lack of volume. Now, you can't take the current daily candle here because we're not really done with the day here. But at the same time, taking a look at the last few days, we've been seeing a general downtrend. Now, some people will say, Nick, you're just looking at Coinbase. That's a very fair point. So it's important when you're taking a look at volume to take a look at BLX, so the Brave New Coin Liquid Index. Now, again, it's not going to show us the most recent day of price action, an important thing to note here, but the volume is relatively stagnant. And taking a look at the weekly, it becomes even more apparent. We can see that we've been on a general downtrend since the beginning of May. So as we've been pushing sideways since the beginning of the month, and volume has been diminishing here, is this really a positive thing or a negative thing? Well, there's different perspectives on it, but I'm going to go ahead and say that right now, so long as price holds in this general range, and eventually over the next coming days, starts to push up against that $10,000 figure of resistance, I would say that it's actually quite bullish. Here's a reason for that. The reason why it can be bullish is after you have a significant rally like this, right? You have a significant bolster of volume, significant bolster in price. When you have this kind of general pullback where prices are pushing sideways, not making much moves, you don't want to see a massive set of sell side volume. We're not really getting that here. We're getting diminishing volume as price has been stagnant. So the only thing we want to see here to really confirm that this is bullish is a good set of 2 or 3 days of positive upside volume in price. And again, that's what's going to carry us over that finish line of 10,000. All in all, right, taking a step back, not really fretting too much about the short term, we're exactly on pace for where we should be. We're looking at the expanding cycles, 205 weeks here for our target range. If we take a look to the monthly here, to simplify it even more, looking at 47 months, adding a year on top of the previous cycle, because that's exactly what we've done every single time for previous uptrends. It's going to take a while, guys. It's going all the way to November of 2022. That's our target range for 100K. And I have no doubt we could possibly go beyond 100K. Things go really parabolic. That's just the general estimate from the current logarithmic chart that we have. Okay, so we talked about that. Bitcoin dominance I want to discuss as well, doing very, very nice over the last few weeks as we had a pretty stagnant drop here in Bitcoin dominance. holding up quite nicely here ever since back here May. This was an error on the chart here, but you can see a really nice move here from 31% up to 33.75%. And now we're really seeing if whether or not we can get break above this line that's been holding down the two previous lower highs. What's going to be the determining factor? It's going to be ETH. It's going to be ETH and whether or not this current breakout right now that we've had over the last couple of weeks against Bitcoin is going to continue and carry onward and go up to higher levels, possibly testing up not only towards the previous highs, but going up to 0.03 in this case, or 0.03 BTC or 3 million Satoshis. Again, we'll have to see if it can go through on that. Price, though, is looking quite confident. And who can blame investors right now for getting confident about Ethereum? There's a lot going on in the ETH ecosystem right now with DeFi. Big piece of news here that we talked a little bit about the other day when we discussed about, I think we might have shared in this case about REN. The REN VM launched its mainnet just last week. And it was really exciting to see this news because this is big news for not only Ethereum as a network and REN as a technology, but really the broader DeFi ecosystem. And to really be able to bring on DeFi for a lot of different participants in the crypto space, such as Bitcoin, Zcash, whatever it may be, a lot of different cryptocurrencies. So what does it mean now that we have this, as they mentioned here, they're welcoming the new cross-chain era here for DeFi? What does it mean to have multiple assets like this? So the general benefit of REN as a DeFi protocol is that it allows for you to bring on a variety of different cryptocurrencies and build liquidity pools and be able to utilize, to put it very simple, utilize Bitcoin and Zcash in trading pairs with Ethereum and other types of assets in a completely decentralized fashion. That's right, folks. That means we do not need any exchanges. We are doing this all in a decentralized fashion, and we can trade against any other asset, not just ERC20 tokens to Ethereum or stable coins to Ethereum or ERC20 tokens. No, we're now able to do cross-chain trades. It's truly fascinating. Now, again, the important thing to note here is that this is basically allowing us to do what would equivalently be swaps. It allows us to be cross-chain. It allows us to be agnostic to one singular chain. And this is extremely exciting. The way that it works in a general sense here, just to understand a little bit of the simplified kind of technical background, is that basically there is a decentralized way to custody here for the assets. They dive a little bit deeper into. You can go ahead, you can read the white paper and some of the technical intricacies of it. But it allows, in this case, for us to build a system where now we can basically do swaps. We can trade all these different assets. So the possibilities are practically endless. This allows for privacy coins to trade against Ethereum. It allows you to do all kinds of interesting things that wasn't possible before. Outside of that, if that wasn't exciting enough as is, REN has been an exciting project for some time. Governance tokens are heating up. Compound is finally sharing some of its details in regards to the distribution model for people who utilize the Compound protocol to receive Compound tokens. So the team owns some, but at the same time, they're looking to just basically, in a sense, kind of give away a large portion to people who are utilizing the actual platform. Outside of that as well, we've also got P Network in this case coming out and talking about the new governance tokens as well as CurveDAO. So these are some of the big DeFi projects out there that are now looking at possibly doing DeFi governance tokens. So there's a whole new race. I think this is going to be one of the big kind of not so much hype waves in the space. I think there's going to be some substance to it. There's going to be a lot of excitement with a lot of these DeFi protocols and the potential that they're going to bring as they mature over the next year or two. The governance tokens are going to be a really interesting selling point for the DeFi space and probably bring a lot of investor interest. KNC is an example of this, Kyber Network, as well as Compound Token, as we just talked about, which hasn't really fully launched yet to the public. We've got a lot of different plays here, so it's going to be very interesting to see. Now, we've talked a little bit about in cryptocurrency markets, but we want to dive in a little bit into traditional markets. Let's talk a little bit about the current reality that we're living in. So we've got a lot of exciting positive things going on in crypto markets, but when we take a look at traditional markets, there's a lot going on in the world in regards to things that scare us. Not just what's going on in the headline news right now, but just taking a look at the raw economic data. Here in 2020 right now, in the month of May specifically, is seeing the largest amount of large U.S. bankruptcy filings since 2009. So this includes Chapter 11 and 7 bankruptcy for May in all years, minimum liability of $50 million, right? So this is taking the month of May over the course of all these years, and this has been the worst one on record since 2009 for the month of May. the largest amount of filings. Nearly 26 different filings here, singular in this month. Now, again, this isn't all bankruptcies. There's probably thousands, if not just a few. There's a few hundred, if not probably up to 1,000 bankruptcies in the U.S. Probably even more than that, to be honest, sadly. But this is basically measuring ones with over $50 million in liabilities. So what's really causing this here? What's the biggest drive here? Well, there's a lot of different factors, a lot of different industries that are hard hit. But the major thing here is the oil industry. Crude oil production has dropped like a rock here over the last few months as operations have had to go through painful cuts and have had to make massive layoffs here over the last couple of months. And this is all not only due to a response of COVID as the decrease in demand has become apparent, but along with that as well, right now there's just been a glut in supply across the world. And this is starting to drag prices down. And luckily prices are starting to turn back to more normalized levels. Again, I like cheap oil as much as the next guy, but at the same time, I also understand that there are terrible economic ramifications for the actual sector, in this case for jobs and, for actual economic activity. But major thing here that's interesting enough is that even as we've had these massive cuts, because of the stark lack of demand for people traveling, whether it's airlines or people driving around to their jobs and actually just opting to work remote, we now still have the largest stock of crude oil supply here in the United States. So record levels breaking out of the 5-year estimated range here that we'd had for the current data set. And along with that as well, if we take a look here at asset markets, this is taking a look here at a very interesting measure from one of the Fannie Mae and Freddie Mac products, which is a credit risk transfer security. It's a fancy term for a slightly different version of a mortgage-backed security. We can see here that after a stark decline, showing us the reality of what these assets are really probably worth, or the chance of their delinquency rate, well, the Fed has come back in and we're climbing right back up. Steady uptrend, just like we've done for the last decade beforehand. More than last decade, since 2008. And if we take a look at asset markets here, take a look at markets across the world. Some markets are up nearly 2-3%. Even if we take a look at the U.S. right now, which again I think most of us would agree should probably be in the red right now with all that's going on, the Dow Jones, S&P 500, small caps, they're in the green or neutral. And man, if you take a look at foreign markets, I mean, things are just positive. The China H shares up 1.6%. RTS for Russia up nearly 2%. The Hang Seng for Hong Kong up 2.6%. And India up nearly 3.5 to 4%. I mean, this is just a true shocker, especially taking a look here at U.S. indices. Now, as much as equities are doing good right now, of course, we are seeing a positive reaction to endless central bank monetary policy. It's hard to bet against it. It makes complete sense why equities are up this high, because central bank monetary policy has decided to continue propping up an asset class versus the real world economy. We have to take a look here at precious metals. It's one of more of the interesting stories here that I've been focusing on here over the last few weeks. We can see over the past few weeks that silver has actually been outperforming equities since back here in the bottom in March. It's an interesting thing that's not getting talked about a lot. In fact, silver, which went all the way down here on the spot price for the paper products like the ETFs, the CFDs, things that aren't really representing the physical asset, went around from around 1165 all the way up to 1816. Really interesting price here. So it's not only interesting to see silver doing so well, but also to take a look at the gold to silver ratio. Gold's been doing pretty good too, right? But silver has been absolutely knocking it out of the park after gold had really taken on the lead here back in the beginning part of February into March as we had the pullback. And interestingly enough, it looks like we're going through the next commodity cycle. We're seeing beginning stages, the dramatic drop here, like we saw back here in 2008, going into 2009, all the way to 2011. The lower this ratio goes, the more beneficial it is for silver. And I think it's interesting not only to take a look here at how silver has been reacting to gold, but also to the S&P 500. And we're doing exactly what we did back here in the early part of the 2000s. We're starting to see the beginning of a commodity cycle where silver is going to start to lead. And it's a matter of just simply breaking above this key resistance point that's weighed down the gold to silver, or the silver to SPX ratio from here, here, and here. So we just have to see that come to play through. And along with that, again, guys, I always bring it up with Bitcoin here. I mean, you're not going to get much of a difference from the current price, as it just shows how much Bitcoin climbs as an asset compared to something like the S&P 500. But it looks like we're setting up very confidently as we've still continued higher lows here. And we're continuing to get up here to test against these consistent levels of resistance from the lower highs. I think it looks like we're setting up for the next breakout here to really start picking up pace going into the fall, going into the winter, and eventually testing back up above those highs. Again, this is not just a Bitcoin chart. It's against the S&P 500. Gives you perspective on just how well Bitcoin's performed as an asset and how likely it's going to probably continuing that performance. Two quick things to talk about to build on this point. I'm going to go ahead and zoom in here because it's a small picture so you guys can hopefully see I'll do a little bit more. So this is the GSCITR commodity index to the S&P 500 ratio. This is a chart we've talked about before. We've viewed it through Bloomberg and a few other different sources, but this is a very important chart to see just how cheap commodities are comparative to equities. The broader S&P 500. This is the global financial crisis, 2008. Really, actually, I think this is peaking more into 2011 with the performance of gold and silver. But again, this is speaking to the reaction to the global financial crisis, which, again, it takes time and ramification after mass amounts of central bank monetary policy for these assets to really start moving higher. And now, this is generally where we were at the beginning of 2020. What's the bet here? I understand, obviously, we don't want to go against the trend here. But if you're talking about not what's going to happen over the next few weeks or the next month, if you're talking about the next 6 months, the next year, to the next 2 or 3 years, as a macro trader, right? That's how I at least trade personally. What do you think is the favorable bet with this ratio? Going long on equities, which I do have some positions to equities, as we've been doing some alerts on our trades in regards to the newsletter group. Or are we going to be betting on something like commodities and precious metals, on cryptocurrencies, non-correlated assets that aren't tied to the performance of economic assets like, for example, in this case, companies, equities, or even properties that have to do with the overall status and confidence of the housing market in a specific country? I think it's commodities, and I think it's Bitcoin and cryptocurrencies alike. It's systems that are outside of the traditional system. And one interesting little chart here that I wanted to toss here at the end. This was something that I thought was very interesting. It was on the daily brief, or the daily shot brief. It basically compared the virus RNA per milliliter of SARS-CoV-2, so what's going on right now, in regards to what that was found in sewage versus the actual case numbers. So I never even thought about this. You could technically see cases of the virus in sewage. And what's interesting is that as we had, again, a growth here and a decline, we also had almost a lagging effect here in regards to the numbers we saw in sewage over time. So it's good to see. This is an interesting data point to track. I thought I'd share it with you guys. I know, sorry to kind of kill off the whole message we were talking about, but I had this up because I wanted to share it with you guys, because it's a sign of confidence. This is really good to see that we're seeing a decline here, and also in sewage numbers as well, out of all economic data numbers that I can bring up. But at the same time, I think this is something we'll have to watch, and I wonder if we could use this as a longer-term metric to track whether or not we're going to see a spike in outbreaks soon, and that we could maybe take a course of action sooner rather than later. But anyways, very interesting stuff to see. That all being realized, guys, thank you all so much for watching. I hope you all appreciate and enjoyed this video. If you did, drop a like, consider subscribing if you haven't already, and possibly hit the bell icon. YouTube's not very good about notifying people about new videos, so you have to hit the bell icon and stuff to make sure you don't miss another video if that interests you. No problem if it doesn't. One other thing I wanted to mention, I know I've shared it a few other times, but I'm going to be speaking at BlockDown 2020, virtual conference. It's going to be hosted from June 18th to the 19th from 11 a.m. to 11 p.m. CET. So I hope to see you guys there. I'm not only going to be speaking myself alongside many other individuals, but we're going to be doing a roundtable discussion, and we've also got Alex Majensky and also Rune from MakerDAO speaking and doing a really interesting DeFi debate. I recommend you guys check it out. But until then, I hope you all are having a fantastic day wherever you are and a great start to your month. See you all in the next video. Stay tuned.